Hey guys, welcome back. It's your girl, Dr. Samara, and I am back with another video. If you haven't already, go ahead and go like, comment, and subscribe to your girl's channel because it is what? It is free, and let's get into this video.
He want the scoop, she want the tea, she want the tea. I cannot speak, we keep it in street, we keep it in street. I took a loss, but you still gon' get beat, you still gon' get beat. How much it costs? It never been cheap.
All right, guys, so I'm going to show you guys basically an update of my easy beginner level resistant and support line strategy that I use still to this day. But the most important thing before you get into the market is making sure that you as the trader has a plan, okay? It is very important to have a plan before actually making a trading execution within the market, because if not, you can definitely blow your account and things are just not going to go the way that you want it to go. So before anything, guys, I have 3 mandatory that I must confirm before anything, okay? So the number one thing that I have to stick with is making sure that basically I am not forcing any trades. Do not ever force a trade within the market, because I'm telling you, you will lose more money than you have deposited into your account. So I never force a trade whatsoever. That's the number one thing, okay? The second thing is that I always trade between the hours of 6 a.m. Central Time to 11 a.m. Central Time. Anything after that, the market, especially US 30, is not really moving the way that I like for it to move. There's not really a lot of volume that's going on. And typically, 6 to 11 a.m., that's like a good time to get into the market, especially dealing with the New York time. And it's just the overall more of an energetic market in the morning rather than nighttime. Now, however, if you are a trader that's a little bit more comfortable with trading at nighttime, that is perfectly fine. Whatever works for you, you stick to that plan. So the first thing is that I never force a trade within the market. And the second thing is to never trade outside of the trading hours that I set for myself. So if I don't see anything at 11:03 or just 11 o'clock in general, I am not going to make a trade, because I've already set my hours of trading, and it is what it is. If I didn't see anything from 6 to 11, it is what it is. You can start over the next day. The market is not going anywhere. So keep that in mind. Don't try to force anything, because this is a marathon, not a sprint, and you will thank me later. And the reason why I'm saying that is because I've lost a lot of money by trying to force a trade and by trading out of hours that I'm not familiar with. So you want to be comfortable with the hours that you are more familiar with and sticking to that. Last but not least is having a profit goal or a pip goal each and every trade that you get into. It is very important as a trader to always have a pip goal or a profit goal in mind, because if you do not have that type of goal in general, you're more likely going to blow your account. And the reason why I say that is because I've definitely done that numerous of times. Just getting into the market, I make $400 here, and I'm like, oh man, I could make another $400. No, run away from that. That is just pure greed. When I say greed, that's Greed. That's pure greed. You need to stick with your profit as well as your pip goal and be done with it. Okay. So if you have a goal of making $1,000 every time that you step foot into the trade, you need to go ahead and do that. Okay. And stick with that goal. If you make more than that, that is good. The market was nice to you that day and was able to give you a little bit some. Now, if you make less than your goal and you're out of those hours, you're out of your trading hours that you have set, it is perfectly fine. Again, guys, you have until the next day. And then with combining your PIP goal as well as your profit goal, you want to also make sure that you are giving yourself how many trades, like what's your trade limit? Okay, so with a pair, what's your trade limit? Okay, so I don't want to hear you guys saying, oh, I trade at least 5 to 10 times. I make at least 5 to 10 trading opportunities. That's a little bit excessive, because as a beginner trader within the market, that can definitely go the other way, especially if you're dealing with multiple different pairs. It's very important that you're dealing with at least 1 or 2 maximum pairs, because you are able to understand that market a little bit more better. You also have more of a clear judgment, and you're also able to make very predictable executions within the market. So it's just super, super important that you are sticking to that plan. So the number one thing is never forcing a trade. That's the number one thing. Do not force a trade. If it's not there, it's just not there. Keep it pushing and keep it going, okay? The number two thing is that you want to make sure you are trading within the hours that you have set, okay? Whether that be from 6 to 9, whatever the case may be, you stick with that and keep it pushing. If not, you will never see the compound reality of your account. You will never see the potential of your small account growing into a much larger account, because you are not sticking to your trading plan. It is very important. And the third thing is always having a profit or PIP goal, as well as making sure that you have a trading goal. Also, if you haven't already, go ahead and go purchase you a trading journal. It is super important to write down your trading plan, because if you see it on a day-to-day basis, you start to mentally understand it, and you start to just mentally be prepared for the market. It's just very important. And there's a lot of consistencies as far as repetition within the market. So you'll notice that, hey, I went into a pending order where I went in for a buy stop for this price line, and this was my TP, and it was able to hit. And then somewhere 2 weeks from now, the market went back to that same area, and possibly you could probably use that same pending order analysis that you had 2 weeks ago that went and you were able to make a profit. So starting off with this strategy of mine with support and resistant lines, guys, this is the most basic, simple strategy that will help you to gain the pips that you want. Okay, first thing first, I always look at the day chart. The reason why I always look at the day chart, guys, is because this is giving you the overall trend that you're looking for the whole day. Okay, and the reason why that is very important is because if you don't understand the trend for the whole day, then if you're not a scalper trader, you're going to most likely lose some money or just be in a very long drawdown, which you're basically in the red for some time until you start to be in the blue. With me, I don't like to be in the red for a long time because I have anxiety, and I just don't want to have that happening, okay? Because it's just too much going on. So just for an example, when I say just trends altogether, you always want to use this angle brush right here and grab it all the way up here. Just drag it up. And what you see here, you see an uptrend, okay? And I'm actually going to keep this trend line here so that I can look at my 4 hour, okay? You look at your 4 hour and you notice that indeed it's going the same way. So it's an uptrend. So for me as the trader, I'm looking at it as like, okay, I am going to go in for a buy opportunity, because whatever trend that the market is going into on any pair that you trade is most likely going to have a lot more opportunities of buys versus sales. And then vice versa. If this was to go down for a downtrend, you would look for more opportunities for a sale, okay? So after looking at my 4 hour, I'm like, okay, I'm gonna look at my 1 hour, okay? And this is the steps that I use on my MT4 on my phone, okay? I look at the 1 hour, and I also see that, hey, it is still an uptrend. Now, it may not be as distinct as my 4 hour and my day chart, but it's still showing that uptrend. Last but not least, if I want to go in for a scalper position, or if I want to go in for a market execution, basically where I get into the market, I do not place a pending order or anything. I'm looking at my 15 to see what type of price line am I going to look at before getting into the market. Usually, if I am a little hesitant and I want to basically have a secure position, I always go in for a pending order. With that being said, if you guys see from here, you guys notice that the trend is a little bit different compared to the other longer time frames, right? Now, it is very important, guys, with my strategy that your 1 hour, 4 hour, and your day chart are all aligned. It is okay if your 15-minute chart is not aligned with your higher time frames, because at the end of the day, if you're placing pending orders, you're most likely going to hit your TP when you're dealing with the older time frames. Okay, your 15-minute and your 30-minute time frames are more of a scalper position. You're just getting in and out. So you always want to make sure that your 1 hour, 4 hour, and your day are all aligned with the trends. It is okay if your 15-minute is not aligned. However, if you notice that your 1 hour, your 2 hour, and your day is not aligned, you do not need to get into the market, especially if you're dealing with a pending order. Because now, most likely, the market is in consolidation. And if you are a trader that has not researched or has not done a lot of practice when it comes to consolidation, I do not recommend any trader who's unfamiliar with that portion of trading to get into the market. That is why it's super important that you stick with your trading strategy plan and just stick with that. Do not do anything outside of it, because when you do, then things start to get a little bit foggy, and then you start losing money. You don't understand why. Then you start getting upset, and then it's just a whole tornado, and then now you're just in a very emotional wreck right now, and that's not what I want you to be in. Okay, all in all, with the 15-minute, it is still going up. Okay, all right, so we know overall this market is a uptrend, so I'm going to look for a buy opportunity. Right? By doing so, I am not someone who gets into a market execution. I am someone who gets into a pending order because I have other things to do throughout the day, and I just cannot simply just stare at the market for 30 minutes. So I'm going to go ahead over here, and I'm going to go to my horizontal line. And with my resistance support lines, how I find my resistance support lines is I always look for my twins, my twin tops, twin bottoms. And basically it's either your flat tops or your flat bottoms. If you see that they're aligned just like right here where I'm placing it at, that's where you will place your support line. So this is your support line. And the other ones will be more so, okay, you have your twin tops or your twin bottoms, or you have a smaller candle with a larger candle and they're both aligned. So there's a few that are like that as well. So I'm gonna just go ahead and place them here. That is how I find my support and my resistant lines. It's just simpler for me to look at those type of candles rather than just trying to figure out what is a good area by looking at the price line. I look at the candles when I do my support and my resistant lines. So from there, I found one just right here, very good. And then also, if they have the same wicks at the top, I sometimes will go ahead and use that as well, especially if it's especially if the market's a bit rocky, then I'll use the wicks as well. Because wicks are pretty much future indicators for you to understand that, hey, that this price level, you know, in the future may not be right now, most likely will break, okay? So I always try to just make sure that I have at least 3 lines, okay? So this is my ultimate resistant line. This is now my support line for this resistant line. However, this is a resistant line for this support line, okay? Now, you may be wondering, okay, so how do you find your pending order? How do you find that? Bam. That's when you start to put in more resistance support lines. Now, your chart may look a little bit crazy. It may look a little bit messy, but if you understand what you are doing, it may look messy to someone who's on the outside who is unfamiliar with your strategy, but to you, you know what's going on. Okay, so I'm gonna go ahead and mess with this consolidation that occurred a little bit before. And just like that, this is now some support and resistant lines. So now you see that the market is in your support and resistance at much of a shorter distance rather than a longer distance, especially if you're someone who's very cautious and does not want to make too many pips. This is definitely a good strategy to go by. Let's say, for instance, we're right here, right? It's about 7 a.m. in the morning, right? And I'm looking for a position. I'm looking for a pending transaction. Now, remember, we are looking for a buy opportunity. We're looking for a buy opportunity because we've seen that the overall trend was an uptrend, right? So from there, I see a possible opportunity. However, I'm going to do a little support line right here because this is where I want a pending order to be at, right? So ultimately, we see that there's a small little pullback. However, we also see some wicks. And just to emphasize again, wicks are your future predictors. They're telling you what the future has in store, right? Look at this long wick that occurred right here on this big candle, right? And then look, it has done this drawdown because I'm telling you, wicks are your predictors. Now, it may not happen right there and then, but it's going to happen. As you guys can see, looking at this wick, it did do a little drawdown, right? It psyched you out. But if you were still going to hold on to that drawdown, look at this. You are making money. And not only did it go past the prediction, we have more predictors of what it can possibly do, right? So I understand that this is a drawdown here, but I want to go into a buy stop. Okay, my buy stop is going to be 34,368.98. That is my price line that I'm looking into for my buy stop. And then my TP will be 34,410.36. That is my TP. And the reason why I'm not going to go with the prediction, because again, anything can happen. It can hit up here and then hit all the way down and then decide to go all the way up there. And I just don't have time to lose any money or just be in the drawdown for so long. So at the end of the day, I'm going to hit where we see flat tops and flat bottoms, right? And that is why I chose the TP of 34,410.36. And this is why I chose my buy stop to be 34,368.98, because one, I know that the overall market is going in an uptrend. I'm looking for buy opportunities. Never trade against the trend because you're going to be not doing as well. Now, you may get a couple of pips here and there, but it's just better to trade with the trend. Trade with the trend, trade with the trend. I emphasize that, especially with this strategy, okay? Then from there, you wait. Now, you may ask, okay, what's my stop loss? That's important for you as the trader to figure out how much are you willing to lose. Me, I do not create a stop loss. And if you're familiar with what I do within my trading community, I always say create your own, because I want you guys to be comfortable with your trading. Okay, I want you to understand how to set stop losses and things in that nature. So this is primarily the most easiest strategy that I use till this day. And I went into depth of how to use it. If you are using this strategy and you are a part of my trading community, because I try my best to send you guys at least one opportunity between Tuesdays through Thursdays within my trading community. And those are the days that I trade. Those are the days that I notice that US 30 moves the best, from Tuesdays through Thursdays. And I will send out a trading idea. Now, there's been some days where I haven't sent out a trading idea because the market was not in my favor. I did not see any movement. I didn't see such a good opportunity. So again, I'm not gonna force that. I'm not gonna force something that's not there. You know, trading is like a relationship. It's so many ups and there's so many downs, but you gotta realize that you have to work at it in order to continue to be the best that you can be. So with that being said, I hope you guys enjoyed this video. I hope that this video was very useful for you, and I hope that you can get comfortable and start using this strategy. Comment down below if you have been using the strategy and how has it been affecting you and your trading. And comment down below if you are a part of the trading community. Guys, we're trying to grow it, and I'm super excited to see so many of you guys just grow as not just traders, but also just financial leaders within this world, because we need you guys. So if you haven't already, go ahead and go like, comment, and subscribe to your girl's channel, because it is what? It is free, and see you guys in the next video.